Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
Hello everybody, this is Sam Barker here with Aaron Kennedy again today on Black and White Market Minute with Life Planning 101. Going to talk a little bit about interest rates, some Bitcoin strategy and things like that. So Aaron, where do you want to start today?
Oh, let's talk about MicroStrategy. It's such a interesting company, and you know, it wasn't too long ago that most people couldn't invest in Bitcoin, especially if you're going through the brokerage channels. I mean, what was that, February of this year? I mean, right at the beginning of the year, they issued the first ETF that you could buy Bitcoin. And before then, you could go through certain investable trusts like Grayscale. But for the most part, a lot of people didn't understand it. They didn't allow it. And it was just very, very difficult to get that kind of exposure, except MicroStrategy. And MicroStrategy is a pretty unique company. It is a software company. We were looking up some price actions, you know, back in the, I think was it 2000, that they did a huge stock split, and then just a couple of years later they did a reversal, 10-for-1 reversal, so their stock dropped quite a bit. And here recently in the Bitcoin years, Michael Sayers has kind of taken over and taken a lot of the profits that the company's made and reinvested it back into Bitcoin. So you could use that company as a proxy for the price of Bitcoin, because that was basically the holding. That's basically the company.
Yeah, that's the majority of the value.
Yes.
Yeah.
Just kind of run it down. I was doing a little bit of reading today, and the software business today is somewhere, you know, $1 to $2 billion company. The software is the major part of the earnings, but it holds $32 billion worth of Bitcoin, and it's a $80 billion company.
Yeah. Well, and it's kind of funny. We've talked about, you know, old economy businesses where you have warehouses and trains and cargo trucks and things like that. Well, this is kind of one of the new style economy type businesses where their digital currencies is a lot of their assets.
Yes, that is the biggest thing on their balance sheet by far. And he had such a vision to come out and do this. It's actually remarkable, because this was no free ride for him. He was being burned in the media constantly. Early on, there wasn't a whole lot of people singing his praises. It was more like, yeah, you can buy that company, but you know, you're just throwing your money away.
Yeah.
But he stuck to his guns. He saw the bigger picture, and it's a very
High conviction trade.
high conviction trade, and most people have heard of this company. He's done a phenomenal job. But it's a difficult company to evaluate, because the software piece of it is so small. And even right now, if you look at it as a Bitcoin proxy, you know, there's only a little north of 30 billion, and it's an $80 billion company, so there's a lot of hype built into it. You can see a major drop in this stock before even Bitcoin moves. You know, it's just bid up that much. But I don't know if it ever slows down, to tell you the truth. The way he's financing this company it's light years ahead of everybody else.
It's what we need to be doing as a country.
Yes.
So essentially, what did they issue recently in terms of they issued debt in order to acquire more Bitcoin? Did they not?
Yes, they started out. They were going to come out with a $1.7 billion convertible debt offering. $1.7 billion, and the interest rate that they were going to pay everybody was 0.
Yeah. So essentially, it's going to get converted.
Well, if Bitcoin continues to go up here in 5 years, or 2029, I think it's December of 2029, you can convert that bond into 1.4, 1.48, somewhere around there, shares of MicroStrategy.
And if you don't convert it, you get your principal back.
Yes. Yes. And the crazy thing is, as of today, it's a $400 stock. I think when the converts were issued, it was 450. So we were expecting to be able to convert that into, as of today, $672 worth of stock. Bonds are $1,000 a piece.
Yeah. Talk about a little bit of hype.
Yes. So it's putting a lot of faith that Bitcoin, not only MicroStrategy, but Bitcoin is going to make a big move within that time. I was listening to him speak the other day, and he likes to tout that Bitcoin on average has been about 40% a year growth, a little bit better than that, which is absolutely fantastic. So at a 5-year run, and if Bitcoin does average, this should play out for everybody. And if it doesn't, you can get your bond back. Zero interest, compounding the money is gone, but you don't have to take that risk of the price of Bitcoin going up and down. And, the first thing you'd think about is, who in the world would do this? I mean, if you had this big of a conviction, why not just buy Bitcoin, or buy some long-dated calls on the ETF, something.
I was just thinking, so you could look at MicroStrategy as kind of a diversification play where you get some exposure to Bitcoin with the backup of the operations of the business. But the operations of the business relative to the Bitcoin asset are so slim that it wouldn't be much of a diversifier at all.
Yes, yeah. I don't know how that would work. But, it did get me to thinking is, who wouldn't be able to get this kind of exposure? Who in their prospectus says you can only buy fixed income products, and of your portfolio you can only
Insurance,
yes,
some of those retirement type plans.
pension plans, definitely insurance companies, maybe some central banks and that kind of thing. So it would appease some people that don't have the ability to buy it. They can go through and use this as a proxy, but that's building in a lot of growth. So
Somebody else who I don't think can buy it, or at least hasn't publicly bought it, is going to be the U.S. government. Is that right?
yes, at this point they haven't bought any yet. They still have stuff on their balance sheet that has been confiscated, mostly from nefarious people or companies, black market stuff. They have, I don't think they've sold anything that they've confiscated so far. But that, like you said, that's supposed to change. It's one of
Trump's proposals?
Yes. 1 million Bitcoin over the next 20 years. That's a lot.
Yeah. Well, and we were reading earlier that it's going to ultimately, Bitcoin's supply should cap out at 21 million coins approximately. Is that correct?
Yes.
So that's where that 5% comes in of the total supply, not current circulation.
Right. And nobody really knows how much is out there. We don't know how many's been lost to either confiscation or losing a password to your storage. There's a considerable amount that is wasted or just gone. And for the 21 million, we're going to get close, but I think the way it's designed is, the supply is constantly cut in half. So we'll actually never get to that end number, but it'll get close.
Yeah.
It'll get close.
And if they start loading up with Bitcoin, they are essentially, hopefully, going to be employing the same strategy that MicroStrategy is employing, where they're going to be theoretically issuing debt.
Isn't that funny to think about?
Yeah, they're going to be, issuing debt to debt holders who are going to have to fight the inflation, and buying Bitcoin, which is a hedge against inflation, looks like a pretty smart trade.
Yes. They're going to be in the exact same thing, issuing debt to buy Bitcoin, and it makes perfect sense. I wish they had jumped on board a lot earlier. They'd have had an asset that really has a chance for some huge appreciation, and that falls into the exact reason that we like it. What I like to say is at the end of time, You know, when all the hype is gone and we're using Bitcoin for bread and butter, it should be fairly stable. It should be what a currency should look like. The only difference is all the dollars that are printed out across the world should cause Bitcoin's price to increase. And it's not really, if you think about it, it's really not appreciating. It's just not depreciating with the dollar. So that spread is getting bigger, you know, but it's just keeping your purchasing power to the same, you know. So basically, if let's just say the U.S. government goes out there and prints out 20% more dollars, your Bitcoin should increase by 25%. And I don't see us stopping printing anytime soon.
Let me throw this out there. Is it possible that you could ever see, and this is a curveball, I've never asked you this, so is it possible that you could see a dollar that's backed by Bitcoin instead of Bitcoin replacing the dollar? So similar to what gold used to be, and then as it's been phased into just a piece of paper, what does that look like, or do you have any kind of stances on that?
That would have been a smart thing to do a long time ago. I think the cat's out of the bag and we just have too much spending at this point. It can always happen. That would be the safest thing for all central banks, is to be backed up by an asset. But when we do that, it runs into the same problems that we had on the gold standard, where it caps our spending. You know, we can really only cap up to
What exists?
Yeah, to what our currency's worth. I mean, it's not exactly a cap, but it gives somebody a reason to say no to the debt. Although it would be perfect, but I just don't see them doing it. I do see them coming out with their own central bank digital currency, and I think we've talked about that before. It gives them that they can print money at the push of a button, much easier. They can track what we're all spending on. They can have tighter reins on who spends what and in what amount, and make sure all of our taxes are paid, and make sure that nothing falls through the holes, and that kind of thing. I can absolutely see them doing that, but they won't have enough control over Bitcoin to use that as the proxy.
And essentially, so the main difference there between Bitcoin and what a stable currency as a government asset would be, Bitcoin's capped, but there are obviously coins out there that are uncapped that have no pre-designated maximum amount. Is that right?
Oh yeah, there's lots of them. I'd say the majority of them are that way. They're used as a tool or a token instead of for a currency.
Yeah.
So that's one of the unique things with Bitcoin, is it's a scarce asset.
Well, and I know that you have college kids out there that are making their own coins. I was watching a documentary the other day there was this younger kid in his middle school or early high school years, and he went onto a website where you can kind of create your own coin. Now they're priced at fractions of a cent early on. And then I think that it started trending on Twitter or something, and it jumped up a few cents, but he held all the coins in circulations with the exception of a minor few. So once somebody started buying it, it spiked the price, and he sold it and pulled the rug out from people who were buying it. So it's one of those things where it never even, whereas Bitcoin's approaching 100,000 a coin right now, he made thousands of dollars on a few fractions of a cent as it moves. So it's just an interesting world out there that, these Chuck E. Cheese coins that are out there, you can kind of keep an eye on.
And, speaking of that was the game not too long ago. You'd have these developers come up with these new coins and had this theory behind how they could use them, and they'd go out and sell them in the open market. Big-time marketing firms would, help push this stuff, and same thing, rug pull them. And mostly the developers were the ones that ended up with all the money and all the wealth. So on these smaller coins, I don't do anything with those, and I see them as very risky. I've had lots of conversation. I know several people that are very knowledgeable about them and keep up with all that stuff, but I do not. I've seen it too many times where they just craters down to nothing and they're gone.
Yep.
So, just be careful if you're playing in that world. That's definitely more Vegas type
than Bitcoin.
Yes.
Yeah. And Bitcoin's not necessarily one of those things that you want in a portfolio to be overweight to a degree that you would consider maybe like an equities position or something along those lines. So I was reading a report recently that said most of your risk-adjusted returns when you add Bitcoin are within the first 50 to 100 basis points, or 0.5% to 1% of allocation to it. That's whenever the maximum benefit of adding it to your portfolio is realized, is that first little bit.
Yes. And that's just crazy to think about. Such a small amount can make such a big difference in somebody's portfolio. And, when you're looking at it from a risk standpoint, I would, kind of what I would gauge it is if it goes to zero tomorrow. I know we would all say I don't want to own any of it.
Yeah.
But if it went to zero tomorrow, how bad would you really, really get hurt? If it's 0.5% or 1%, like you're saying, the market average is 10, so 1 year you only make 9.5% versus the 10. Something like that. Make sure if this is interesting to you and you're a believer and you're an investor in this stuff, make sure you have your allocations right. You don't want to have more in there than you can lose.
Yep. So whenever
everything.
Whenever we look at equity market drawdowns, I think the Great Depression itself was an 80 or 82% drawdown in the 20s and 30s.
Yes.
And then you had the Great Financial Crisis, which was a 55% drawdown approximately.
Yes.
Well, I think Bitcoin went from 60,000 to 17 or 16,000 in 2022. So it's something that you need to be very aware of if you're going to keep track of it.
Yes, it's going to drop 70% or so every 4 years, and that's been pretty stable. And to all of this, if you're going to buy a single thing, and it doesn't even matter if it's Microsoft or Apple, you do want to stay diversified because we've seen companies go to zero. It happens a lot more than you would think. Even if it's a single company that you think is the best company on the world, make sure that you don't own so much it would wreck your life if it disappeared tomorrow.
Yeah, and it can happen overnight.
Yeah.
There's a company, Super Microcomputer, came out and delayed filing one of their SEC reports, and I've saw a lot of people saying, oh, it's just this or it's just that. It's justifying holding on to a little bit longer, and then you get an auditor that comes in and resigns from that position, and then it goes down further, and they find another justification. So, it's your thesis is as important as anything.
Yeah, you still got to have somebody that you can trust on the other side, and when that trust gets broken, or even if someone makes a dumb decision, look at Kodak. Yep. Nobody's going to use digital printing. I haven't seen a Photoshop in a grocery store in a long time. So don't put all your eggs in one basket, because it doesn't matter if it's Kodak or BlackBerry or Enron or WorldCom. Companies come and go. So make sure your risk is right.
Yes. So we've talked quite a little bit about risk, a lot about Bitcoin and MicroStrategy. We've talked a little bit about government and spending and what they can do with Bitcoin. You have some yields in front of you, and I know we've been talking a lot about interest rate strategy. What do you have for us in that arena?
We were talking to a fixed income manager, and we were talking about the risk with interest rates, and this stuff is kind of hard to think about. And when you hear things like, hey, the Fed's going to lower interest rates or they're going to raise interest rates, you would kind of want to believe that it's going to be in a parallel movement. So if the Fed drops interest rates 50% or 50 bips or 0.5%, you would think the 1 month would drop 0.5%, the 2 year would drop 0.5%, and so on all the way down the line. And it doesn't work that way at all. The Fed really only has control over the overnight lending rate, overnight. And that's a starting point for all interest rates. But once you get out there, a little bit of tenure, or let's say time, you got to start asking yourself, what would it take for me to hold that thing? So if you look at a 30-year treasury, how much would you have to get paid to hold that thing for 30 years? And before you make that decision, let me throw some numbers out there. Our annual interest rate just passed over $1 trillion. By 2034, the Congressional Budget Office thinks our interest payments are going to be about, by 2034 it's supposed to be 1.7 trillion. By 2050 or so, it's going to be 7.5 trillion. At what point do we start to worry about if the federal government can even pay it back? And even if they can, our inflation is taking place that'll make those dollars worth almost nothing.
Yep. They're printing it to pay it back.
Printing it. Yeah. So just look back over the last 4 years. What does your dollar pay? What does your dollar buy? 50% of the eggs, 50% of the milk, 50% of the gas. I think inflation as a whole, we're told is up a little north of 20%. So you've already lost 20% of your purchasing power. You have to have 25% more dollars out there to be able to buy the same things. And that's 4 years. What does that look like at 30? So, the more responsible we are with our debt, the more people we're going to require to take on that longer term debt. And yes, it's going to increase the expense of our government. It's going to make it a lot harder for the government to raise money, and it's probably going to bring down the value of the dollar. And again, if the value of the dollar is going down, but Europe's doing the same thing, Japan's doing the same thing, or BRIC countries are doing the same thing, they can go down altogether in purchasing power, and that's just called inflation. So it doesn't have to be that the dollar loses out to the euro or something like that. It can just be rampant inflation around the world. And how do we hedge against that? We either buy a gold mine or
MicroStrategy.
Or a Bitcoin mine or MicroStrategy. That's exactly right. So I'm hoping this is all kind of making sense of how these things work together and kind of how to plan for this long term, and even 0.5% helps, like you were bringing up earlier. Every little bit helps.
So one thing that you revert back to what we were talking about, that manager and talking about interest rates. One thing that we're keeping an eye on, we're tilting back and forth. We've been inverted for a long time, and we're coming out of that right now where longer-term interest rates are starting to rise above the short-term interest rates. And before that, the short-term interest rates were way above the long-term interest rates. So it seems like we're kind of pivoting around a point around the intermediate interest rates. Does that sound right? Or
Yes. We're finally getting to the point where longer-term interest rates are higher, or actually the 30 years just exactly the same as the 2-month right now. But it's not the other way, where it was 5.25 for really short term, and then a little bit under 4% for the 30 years. So it is normalizing. There's good and bad to that. Normal is always good, but usually this is the point when the yield curve finally normalizes. That's normally when we go into a recession. That's usually the end, or the starting point for a recession. But who knows? We were talking about this earlier. Financial education, or all the rules of thumbs and valuation and everything. It all looks good on paper, but in the real world, how does it normally play out? It eventually will. We were inverted for the longest time in history, I believe. So how does it actually turn out? And if this new administration can get all the things implemented that they want to do, maybe we grow out of this fast and we don't see the typical effects of a recession. Because no matter what we've been told, this hasn't felt really warm and fuzzy the economy that we've been in, unless you've been a huge investor in NVIDIA, then oh my gosh, this has been fantastic. But, you know, if you're a normal person, eating food, going out to eat, buying clothes, making trips, this has been a tough time. So I think there's a case to say that we have been in this recession for a while, and we're closer to climbing out of it than falling into it. Now, stock market and
Economics
aren't always go hand in hand, you know, so we can have a decoupling from the market to the economy. So we're not saying that. And, you know, the market is pretty expensive as a whole. There's some great pockets out there that we're seeing a lot of great value, but as a whole, things are very, very expensive. So I would not be shocked to see things come down in the short term.
Or even, would it even be reasonable to say that maybe they trade sideways and the valuations shrink because the earnings grow, but the prices may not move?
That would be the best case scenario.
Yeah.
Earnings grow by 20%, the stock market doesn't move, and then, you know, year or two, 18 months down the line, we're undervalued and we take right back off. That would be the Goldilocks scenario.
Yeah.
You know, I know we all want the market just to keep growing forever, but
yeah, let's let earnings grow by about 100%
yeah,
and price would grow by about 20.
I would much rather it be a healthy market than just one that doesn't make sense.
You always feel like you're getting closer to the edge every day.
Yes. That's not a good feeling. That's kind of scary.
Yeah. All right, well, I think that closes us up for today with Black and White Market Minute with Life Planning 101. This is Sam Barker and Aaron Kennedy. Y'all have a great Thanksgiving.
Yeah, happy Thanksgiving, everyone.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Don't forget to learn how our sister company can assist you with all of your tax and consulting needs. You can find out more at briscoeandassociates.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.